Hey guys, this is Rudy coming at you live for Best Investor from Palm Beach in Florida. It is a beautiful sunny day. It is Wednesday. It is September the 15th. I've been busy doing charitable work, so forgive me for not having posted a video for a while, but I figured what we can do today is kind of very briefly just get an overview, firstly, of the market in terms of specifically energy stocks, and then secondly, I'm going to kind of walk you through very briefly some of my foundational stocks in my energy portfolio. And we take a quick snapshot look at some of those. And then I'm going to give you a quick glimpse into my speculative energy part of my portfolio. And then we'll wrap it up from there. So I'm not going to make a video that is too long, but let's kind of quickly get into the news here and just share a couple of screens. The first one is Yahoo. I see crude oil up $2.60 today. This is WTI, 3.69%, trading at $73.06. So guys, we're in the middle of the third quarter, and this is a very strong price. If you're an energy investor, this is good stuff. But this is, I think, in my very humble opinion, this is kind of still the sort of early stages of a potential bull run for crude. Despite the fact that the price of crude is going up and down like a bride's nightie, there's a long way to run on this one. I think you could possibly see $100 crude oil within, let's say, the next 6 months or so. I don't want to be too bold because there are too many macro events that can impact what I just said. You can see Brent is currently almost at $76. Natural gas, of course, has been going through the roof, you know. So if we look at the headlines very briefly, oil prices rise further on large crude inventory draw. Breaking news: oil prices and natural gas prices jump on supply fears. Oil prices rise on large crude inventory draw. Don't worry too much about the news out of China. China's government may be selling oil, but its refiners are desperate to buy. So there's a lot of stuff going on in the marketplace right now. And, you know, by and large, if you're just objective and you kind of filter through the news, you might realize, or maybe share the opinion with me, that most of the news is good news. So what I'm going to do, as I said, is I'm going to kind of walk through my own energy portfolio very briefly. I have some foundational stocks and I have some speculative stocks, and let's quickly take a look here and see what's going on. So last year, if you've been following my channel, at the end of last year, I said one of my top picks for the year was Enbridge. Enbridge is a diversified oil and gas company out of Canada. One of the interesting things about Enbridge is that they are also the natural gas utility for the province of Ontario, where approximately a third of the entire population of Canada lives. So that almost in itself provides an amazing hedge, because Canadians don't have to, but most of them will cool their houses in the summer. The summer is relatively short, but for sure they have to heat their homes in the winter, and that's all natural gas supplied by Enbridge. So in addition to the fact that Enbridge owns refineries and oil and pipelines and all kinds of things, they are also the natural gas utility for the province of Ontario. I'm not sure I would necessarily buy into Enbridge right now. I picked it as one of my top picks at the end of 2020. Its PE is 17. That's a little bit rich for me, but not too bad. If it's under 20, it's okay. Ideally, I want to buy in when it's sort of under 15. One of the reasons why I hold Enbridge is because it pays an old guy like me a nice hefty dividend on an annual basis of $2.67 per share, which currently yields almost 7%. Large company, $81 billion market cap, and it's kind of trading at its 52-week high. So it's probably dodgy if you want to get into this one right now or not. Pembina is another company that I own, which is also based in Canada, and they own an enormous swath of pipelines, just moving the tar sands crude from Western Canada all over the place, including into the United States. It has a little bit of a run rate here on its all-time high. It's currently trading at just under $30. Just under $32. And its 52-week high is 34. It can probably go a little bit higher. I'm not too worried about the stock price on this one. It's a smallish company, relatively speaking. It's a $17 billion market cap. But once again, it yields, the old guy, that's me, $1.99 per share, which is currently 6.39%. So not too bad. Total is a super major with a market cap of $120 billion. Its PE is also slightly on the higher side. So it's probably not necessarily a buy right now at almost 19. Once again, nice yield, $3.14 per share, which is currently yielding about 7%. And its 52-week high is about $50. So at its current price at around 45, you've got approximately 10% upside there just to match the 52-week high. One of the things about Total, which is really interesting, is that its operating profits are 4.13 times greater than its interest payments, so it would have very little difficulty in repaying its debt. The quick ratio is just below 1. Ideally, we want to see a quick ratio at 1 or above, but I'll come back to that one in just a second when I talk about Occidental Petroleum. But Total's operating profit interest coverage for the most recent quarter, 4.13, is very, very strong as a financial position. Another one that I like, Energy Transfer, and once again, thanks to Bulldogs #1 for this one, slightly sort of larger than Pembina, but at the same time significantly smaller than companies like Total and Enbridge. $25 billion market cap, lots of run rate here. In fact, Energy Transfer with its PE of 6.88 as a multiple is still yielding 61 cents per share, which currently is a dividend yield of about 6.5%. Its 52-week high is 11.55. I see Energy Transfer back at around 11.55 or even higher than that, perhaps even before year end. With this kind of a snapshot that I'm showing you here, this looks like a buy. This is a decent company, low PE, high dividend, sort of in slightly right of center on its 52-week range. Not a lot of shorts, 3.4 is not too bad. This is a nice one, Energy Transfer. It's I was fortunate. I bought into Energy Transfer when the price was about $7. I think my total cost basis is currently $7.70 because I added some shares after I first bought into Energy Transfer. Much like Total, but not quite as good. Its operating profits are 2.4 times greater than its interest payments, so it should have little difficulty in repaying debt. The quick ratio for the most recent quarter is just below 1. Like I said, I'm coming back to that one in just a second. And the interest coverage, as I just said, is 2.5. Now, how about this one? So we've talked about Occidental a lot. I don't know, I must have made like 100 videos that at least has a mention of Occidental Petroleum. So never mind the stock price. I mean, it's nice to make a video when Oxy is up 6%, but tomorrow it may be down 4 or 5 or 6% again. And like I said at the opening of this presentation, some of these energy stocks are going up and down, or the WTI price seems to be going up and down like a bride's nightie. But what we're looking at here is a company that is currently trading at around, the stock is currently trading at around $28. Its 52-week high is $33.50. There are a number of reasons why this stock seems to be kind of stagnant in this $30 range. I don't want to get into it on this video, but there's a lot of negative market sentiment, but it's changing, and it's changing slowly but surely. An indication of that is that the short interest here at the bottom of the screen in the middle is only 2.5%. Occidental at $28 arguably is a buy. You definitely do not want to be short Occidental right now. But here's the sea change, quarter over quarter. If you look at the most recent quarter, with an interest coverage ratio of 1.51 and a quick ratio of 1.15. So the quick ratio for the most recent quarter, MRQ means most recent quarter, is 1.15. Occidental is actually in a very unique situation or position right now, in that its current assets, in terms of cash and cash equivalents on hand, exceed its current liabilities by more than 1. Anytime you have a quick ratio of 1 or above, this is really good. And Occidental is now actually sort of rising to the top in terms of its debt to capital ratio, despite the fact that just a year ago today, for example, people were still talking about the wall of debt for Occidental Petroleum. The interest coverage for the most recent quarter is 1.5. So when you look at this, you can see that Occidental, in terms of what the management have done an incredibly good job in terms of right-sizing the balance sheet and making corrections in order to be able to show the market that Occidental has the ability to manage its debt. This picture over here in green at the bottom right-hand side of your screen is a good picture. And in fact, it is better than most of the oil companies in the oil, gas, and consumable fuel industry today. That's a very interesting turnaround for Occidental Petroleum. So it'll be interesting to see also what happens with its stock. So I said I'm going to talk very briefly about my speculative energy positions. Ironically, they are mostly uranium. So the 5 companies that I am invested in that I have a position in: Paladin Energy, Paladin's headquartered in Australia; Goviex Uranium is headquartered in Montreal, Canada; Cameco is headquartered in Calgary, Alberta; Denison Mines is also a Canadian company; and Energy Fuels is a US major from a uranium point of view in terms of uranium supply. The reason why I added these 3 little sparks over here is because even though these are highly speculative positions, I managed to achieve a 2-bagger or more or thereabouts with Paladin, Goviex, and Energy Fuels. So what I did in this particular instance for these 3 positions is I exited my original investment, and what remains is the house's money. And effectively, if you think about it in really simple terms, if you have a 2-bagger and you sell half your stock, you get all your money back, and the rest of the money that remains is effectively the same as your original investment position, and you can just let it run. If it goes down, it doesn't matter. I mean, of course it matters because I feel bad if it goes negative, but if it goes positive and it goes up, hey, you know what? That's a good position to be in. The other 2, Cameco and Denison, are actually in my Canadian portfolio, and there I have it counterbalanced with some other heavyweight investments. So those I'm just going to leave. If they run and run a lot, I'll probably plug in a trailing stop or something like that just to make sure that I can protect my gains. But you can see in this rectangle over here the changes. This is like just sort of on a daily basis. So in terms of talking about stocks going up and down, these things are super volatile. So if you don't like volatility, you know, the old adage is if you can't stand the heat, stay out of the kitchen. How about in the last 5 days? So in the same order, Paladin went up almost 24%, Goviex 30%, you got 10% gain year, 17, 23. And how about over a 3-month period, almost a 2-bagger at 83%, 70%, 23%, 20%, 20%. So these have been really, really good. So guys, like that's a wrap on this video. Though, you know, I just shared with you a basket of energy stocks. Some are foundational for me and some are speculative stocks. Of course, as usual, I invite your comments, and I'd like to have you share your top picks with me, because there's always something that I miss, and there are a number of people on the channel who provide me with some really, really cool stocks to look at and things that I've never heard of before. And thank you for that. You know, I do look at all of them. And as usual, you know, if you go into our community channel after the video and make comments, at least moi would be sure to respond to your comments. If you like my content, please subscribe. And on that note, guys, as an energy investor, these are happy days. So have a good time and enjoy. Bye-bye.